Hey, what's going on, guys? Edward here, back with another video. Thank you so much for being here again. This is another killer video, guys. I hope you guys like it. This is another strategy that, like, if you use this thing in combination with divergence, you guys know I like divergences. I always try to spot divergences, divergence. If the market, for example, is trending down, I normally take a look at the RSI to see if maybe at the end of the downtrend we're starting to see some divergence, right? But today is kind of like a little different, right? For this strategy, it's gonna be on a 5 minutes, so it's a scalping strategy. Be careful right now for those who are actually trading indices, because it's very volatile. So you might want to maybe test it out on pairs. Okay, pairs, they move maybe a little slower. Try to find, I always tell this, I always say this, I always tell this to my students. If you are, if you want to trade pairs, try to maybe get 1 or 2 or maximum maybe 3 pairs that you might actually like, and just try to stick with those. Try not to be just looking at all the pairs that exist out there, because you can get a lot of, some pairs, they don't move like others. They move a lot slower, they move differently. So try to find the ones you really like and just try to sticking with those. Okay, so in this case I'm going to be using GBP USD just for the example. I see if I can jump into another pair, but we're going to need two things basically. We're going to need, first of all, the 50 simple moving average. Okay, this is very easy. You just type in SMA and that's it, right? Simple moving averages, right? You select the 50 and that's all you need here on top, right? Remember, we need to be on a 5 minute because this is a 5 minute scalping. Those who are asking, hey, does this work on a 1 hour? Well, just test it out. I've been testing it out on a 5 minute, trying to look for a really good scalping strategy, and it works on a 5 minute. I haven't tested out on a 1 hour. I guess it works because it's simple price action and divergence plus a combination with the 50 simple moving average. But again, if you want to use it on bigger time frames, it's up to you. But test it out. Don't just believe me. Just go ahead and test it out and see if it works for you. Okay, so go on a 5 minute, right? We are going to be using, of course, the RSI to spot the divergence, right? Because that's the only way we can spot, as far as I know, divergences is with the RSI. I don't know if there is another indicator. We are also going to be using supply and demand. It's very important to understand and to know how to spot supply and demand. Okay, what is that? Supply and demand is basically, we're going to be looking for aggressive buying and aggressive selling. Okay, so remember that we normally we don't move the market, right? Whenever you see some aggressive buying or aggressive selling, like big candles, right? When you see all of a sudden the price starts pushing up very strong, you see big candles, or you see that it's a nice big push, that could be taken as a demand zone. Okay, if it's at the bottom, it's just an example, right? And if it's selling aggressively, depending on where you are standing, this could be maybe a supply zone. Okay, so it's basically following aggressive buying and aggressive selling. And so when you put everything together in combination, you will see that this strategy is really, really good. So let's go ahead and try to find some setups, for example. All right, let's try to find some aggressive selling. Let's see if I can spot a few divergences. Market was really ugly right here. A lot of indecision. The price is going sideways. No, you stay away from that. Like if you see a pair that is just going like that, not good. You wanna try to find like a trend that is going up or down, but maybe the trend already started. Let's say maybe about here. I think we have something here. You see this aggressive selling. You see two big ass candles to the downside, right? You can say maybe that's an area, right? This is a potential demand zone. This entire area right here, it's a nice demand zone right here. Okay, supply zone. I'm sorry. I'm gonna put it here. Supply zone, right? Now that you spotted the supply zone on a downtrend because you are below that 50 simple moving average, right? We're trying to look for sales. Okay, when you are when you are below the 50 simple, we're going to be looking for sales. I'm not going to be looking for a demand zone in this area. I need to be looking only for supply zones on a downtrend. If I'm on top of the 50, I have to be looking for demand zone, right? If you're below, you should be looking for supply zone. Okay, because we're selling, we're trying to sell right here. So with that being said, okay, we spotted our potential supply zone. Let's say the price is pushing back up and is getting inside the supply zone. Now we need to see right here, for example, on the top, very important, look at this. The market is going down, right? It's creating lower highs. And if you go on the RSI, the market from this point to this point actually created a higher high right here. You see the price is pushing up and right here is going down. This is it's a hidden divergence. This means the trend line, this trend right here, it could potentially continue to the downside. So in this case, at this point, this is an aggressive setup because you may not find any type of trigger right here like a bearish engulfing candle. If you find it, great, even better. But this is kind of like a very aggressive selling. Like let's say you wanted to enter right there, and because you spotted already the divergence, right? After spotting the divergence, that's when you're going to be getting in. As soon as you spot the divergence, you see the price is going down a little bit. You see it went down with this little pin bar right there. It went lower, so it created already that peak. You see that peak on the RSI right here. This little peak right here already created a higher high. This was the higher low and the last high, previous high, and then the next high, right? Higher high. So that would be the entry. It's an aggressive entry. Then you go just 1 to 2. Okay, if you want to go 1 to 2, 1 to 3, if you want to aim to a next target area, to a next zone, it's up to you. If you want to hold it because you're still below that 50 simple moving average, again, at that point, it's up to you. If you want to aim 1 to 2, 1 to 3, you know, it's also a nice target to aim on this one. So, but that's basically it. It's a scalping strategy. You only, like, for how long you had this thing open until it hit your target? For about 1 hour and 35 minutes. So, nice sale right there. But you see the setup. Again, we have to be below the 50 SMA. We have to spot a divergence. We have to spot a supply zone. Okay. And the price, of course, has to be pulling back, reaching the area, and shows that divergence, that hidden divergence. So let's go and look for another example. Market started just going crazy here. Again, not good when it's ranging like that. We got to wait for that thing to either, you know, just continue dropping or pushing up. Let's see. Supply, demand. Aggressive selling, aggressive buying. It's challenging sometimes to spot those areas, but let's see, maybe this one, maybe this one. This right here, you see the big momentum, aggressive selling all of a sudden. So this is a whole area. It's a very strong area right here. Market is dropping, pulling back very strong, and starting to show rejection, a lot of rejection in that area. You can even say that's a support, right? This right here, the price broke this support, the price is pulling back, touching that resistance now. So that's another confluence you have there. So okay, we have this potential supply area, right? So let's see if we have divergence. Very important, because we have to have the divergence. If we don't show any divergence, not good, not a good thing. I should not be getting in. So we have the price is creating lower highs, and right here it is a divergence. It is very small, but it is a divergence because the market, let me click in this thing here. So if you go this way, you see that this is the low, and right here it's a high, right? This is the highest point at this point, and then after that created a new higher high. So it's very small, but it is a divergence. Okay, it is a very important divergence right there going on. At least in this case, you see that it did give you that bearish engulfing candle, so that would be a more strong sell for you to get in and maybe hold it for longer, or you're more confident at that point. So let's see at least the 1 to 3 risk to reward, that one right there. Okay, nice sell. Again, you are below the 50 simple moving average. You are in a potential supply zone, plus now you're touching a resistance. Now you're getting the trigger, now you're getting the divergence to confirm. You see how many confluences are here to actually go selling. You may not see this thing all the time because it's kind of sometimes it's kind of tricky to spot those supply zones or demand zones. You gotta get used to your eyes, so you better go practice. You have to practice a lot for this, so you can actually spot it more often, see it more often. But you have to backtest a lot, guys. Don't you just think that you're gonna get it just right quick overnight, So you see when the price ranges like that, you may not see anything. You want an actual trend. You want to spot an actual trend, and you want to see big selling or big buying. In this case, I'm not sure if here, but I cannot go further back to continue back testing on this one. Maybe here there was an aggressive selling, but let's use another pair maybe for another example. GA, let's try to use GA right here. 5 minute. Okay, take a look. If you don't spot, guys, if you don't see the divergence, don't get in. You have to see the divergence. Let's say maybe this one a little bit. You see those nice 2 big pushes, aggressive buying. Look at the size of the candles. They were very big in comparison to the other ones. Small candle, small candle, small candle, then boom, boom, you have this big push right there, right? So this is a nice demand zone, right? So we have demand zone. As I mentioned, don't just believe my word. If you don't trust this, just go on your chart and just back test it and see if it works, if it played out for you. So right here, okay, let's try to find all the confluences. The price pushed up, okay, really nice. Now it's pulling back, getting back to a potential demand zone. I also like this that there is it's a nice support right here created, and after the breakout, the price came back here twice. So we have created this nice support right here. So let's go ahead and take a look at the RSI. I want to see if from here, from the moment the price pushed to here. So I want to see right here, the price is actually pushing up. If we go right here below, you see that from here to here, the market is actually going down. So again, this is a hidden divergence. The market is creating lower lows, and right here is creating higher lows. Plus, now you have your trigger. You have pretty much your entry point with that bullish engulfing candle. So you normally placed this thing below, try to put it a few pips below the area, and then 1, 2, 3. May not work all the time, because remember, there is nothing 100% sure that that actually works and all the time, but it's a quite effective strategy, guys. If you back test it over and over again, you will see. Maybe there was something here, or maybe here. There are 2 big drops right here, maybe this big one, but I'm trying to see also the divergence Look at it, like look at the bottom. Like you see, the market is going down, and from here to here is also going down. So no divergence. So not good, right? Now let's wait for this other zone right here, a potential area right here. This entire candle, right? So market is in fact going down, very strong, pulling back. We are in that supply zone. We are also in this nice support in our resistance, right? We are below the 50 simple moving average, and now let's see on the divergence. So from here to here is going down, and just barely right there, that's a divergence. Definitely it's a divergence. The market is starting to show that created a high, a higher high right here, and right here it created a higher low. So a lower high, I'm sorry. So that's a divergence right there. Where is the entry? The entry should be in that engulfing candle, stop above, TP. Let's say you wanted to take here 1 to 2 or 1 to 3. You see, in this case, it didn't play out. If you were aiming the 1 to 3, it's starting to consolidate. I tell all the time my students, I hate when I start seeing consolidation, when the market gets like that. That's a sign for me to get out. I don't care if later on the market will maybe break, but that's a sign for me to get out. Like literally the price can explode anywhere right here. This is like a time bomb. So it's up to you guys. This one you can take this L. That's fine. You know, it's part of the game. Maybe you lost it. What you can do is once the market reaches halfway, you can take partial profits, but that is up to you. In this case, let's go ahead and say we took that L right there. Let's go ahead and look for another setup. A lot of ranging right here. Don't like that. No ranging. I don't know, those pushes are they're not looking good. I believe there is no divergence. Nope. I tried to look for the divergence first because that's the final thing that is gonna make me enter. So if I don't see a divergence, nope, not jumping in. Maybe from here to here, maybe this one, but it wasn't that big. That momentum wasn't that big because we have that pin bar right there. So let's say we'll skip that one. Yeah, when the price is ranging like that, it's it's going down, but you see all that noise. That's a lot of noise. You may want to maybe just skip this type of pair because it's not giving too much things. It's just either consolidating a lot, so not good. Let's check the GJ perhaps. Let's see here. All right, let's try to look from here. Okay, yeah, this 1, 2 big momentum candles right here. It's a big drop. Big drop right there. The market is pulling back after that massive drop. The market did pull back, and it's kind of rejecting, starting to show some type of rejection in this area. So this created a little resistance right there. So you can take that all the way down there. That could be your supply zone. So let's say from here to here is going down. From here, let's say from that candle, pretty much from here to here is going up. So you see it created a high, and right here it created a lower high. So that's a sign for me to sell. Remember, we are also below that 50 simple moving average. It's very important to understand that when you are below, you have to be spotting a supply. Okay, supply zone. And when you are like starting to go above, like let's say here, this push right here, you say that, okay, well, this is maybe your demand zone right here. The price push, pull back, retesting that. We are on top of the 50 simple moving average. This is a trend, right? The price is pushing up. Right here is going down. So you see, you have everything right there. You have all the confluences for you to jump in. It's a bit more aggressive because, as I mentioned, not all the time you're going to see a nice trigger or entry point. So it's up to you if you want to jump in. As soon as you see that divergence, boom, created, you see the price starts pushing up right here, and you see the divergence. So stop below a few pips. Let's say 1, 2, 3. I want to take that 1, 2, 3. That's basically it, right? It's a quick scalp, just 41 pips. You know, it's quick in and out, and that's it. You don't want to, you know, if you're like one of those who doesn't want to be on the on the trade for too long. This was like about 40 minutes, and that's it. You're out, you know. So but that's basically it, guys. Just back test this. Don't take my word for it. Just go and back test this this strategy. Okay, it really works. You have to find all the confluences and the divergences. Sometimes it's kind of tricky. Sometimes you might forget about spotting the divergence or how it works. Just watch this video over and over again so you can understand how to spot the hidden divergence. And again, you can test it out in different time frames. As far as I know, I have tested out only in 5 minutes. Also, be careful with those pairs who are ranging, not good. If you want to test it out in indices right now is not good for scalping. So be careful. If you want to test it out, just back test this and just let me know if you know if it's working, if it's actually working in the comment section. If you're new on the channel, you know, please subscribe. I do post a lot of content in this channel. I try to post every single day. Sometimes, you know, these last couple of days I've been very, very busy in the house and with the kids, and I haven't been posting that often, but I try to post very, very often in this channel. I try normally to post videos every day, but you know, sometimes we got to do our things. So, all right. Give it a big thumbs up if you find this strategy is actually working for you. Test it out, share it with somebody you know that is struggling or is actually looking for a good scalping strategy. This might actually help them out. Thanks again, guys, for watching. I'll see you in the next one. Take it easy, guys.